Now we're coming back to the beginning. What we covered previously is we talked about the original book of entry, which is the general journal. We moved into journalizing those transactions in the general journal and then posting them from the general journal to the ledger, which is the home of every account. We talked about preparing an adjusted trial balance, and we recently just covered the adjusting entries. The adjusting entries are made in the same original book of entry, the general journal. The adjusting entries are made in the same original book of entry, the general journal. So once you have those adjusting entries that are created in the general journal, you then have to do the same thing you do with the original journal entries. You need to post them. So we're going to post our adjusting entries to the general ledger. And only those adjusting entries that are made for the period will go back into the general ledger, which is item number 5. That I should not have to spend a lot of time with because you already have done it in steps 1 and 2. All you're doing is taking those 7 adjusting entries that we talked about, and in most cases, you won't even use all 7. In most cases, it might be 3 of the 7, or 2 of the 7, or 4 of the 7. But in most cases, it won't be all 7. But either way, once you've created your adjusting entries, you are now required to post those debits and credits to the ledger accounts that are affected, and you will put it either on the left or right side of the T account of those ledger. Once you've done that, you will then recalculate the account balance. And we've talked about that in earlier sessions, how you calculate the account balance. So you do your adjusting entries, you post them to the ledger, you recalculate your account balances, and then you do what's called an adjusted trial balance. Here's the deal. An adjusted trial balance is no different from an unadjusted trial balance with the exception of adjusting entries. So if you get something on your test that says, what is the difference between an unadjusted trial balance and an adjusted trial balance? You will say adjusting entries. Adjusting entries are adjusting for time certain accounts so that when you prepare your financial statement, it's accurate. The only difference between the unadjusted trial balance and the adjusted trial balance is actually these adjusting entries that we previously spoke of. Once we have this adjusted trial balance, we are ready for the financial statements. You will never prepare financial statements from an unadjusted trial balance. You will only prepare financial statements from an adjusted trial balance. Why did I take the time to emphasize that? Guess what? You will have a quiz question on that, which says, financial statements are prepared from an unadjusted trial balance or from an adjusted trial balance, and you need to know that answer. We are covering all 7 steps because they are important. What I want to show you very quickly is what an adjusted trial balance looks like. In your textbook, they provide you with an unadjusted trial balance, as you see here, and then it moves forward after adjusting entries to an adjusted trial balance. They both look the same. The only difference is those adjusting entries above them have been posted, and now you arrive at new account balances. Let's look at it. One of the things you'll notice is that the cash balance in the unadjusted is the same as the cash balance in the adjusted. Why? Because most adjusting entries do not record cash. They record or adjust accounts for recognizing revenues or expenses or depreciation or interest or the adjustment for office supplies or income tax expense, but it doesn't involve cash. So in most cases, some of your accounts that are in your unadjusted, look at accounts receivable, is the same. The only difference, if you see these adjusting entries for income tax expense and income tax payable, you will not see income tax expense or income tax payable in the unadjusted, but you will see income tax expense and income tax payable in the adjusted. So the adjusted trial balance essentially records the transactions of adjustments that are now being reflected in your adjusted trial balance. That is the distinct difference between the two. After you've completed your adjusted trial balance, you're ready to prepare the 4 financial statements. What are they? Statement of retained earnings, statement of cash flow, statement of financial position or balance sheet, statement of activities or income statement. Those 4 statements come right after you've completed your adjusted trial balance.